How much Indian stock markets are linked to Europe and USA markets?
Almost the Indian markets are basically ruled by the FIIs. When the FII enter the Indian markets, the Indian market perform extremely. The Indian markets run into the almost the Sensex runs previous to the Lehman crisis, when the Sensex was ruling at around 27 multiple. This was because of the FI interest, which was so much that they were thoroughly invested in the Indian economy and were very bullish on the Indian economy as a sector, as a emerging country, which they were putting the money. But as the Lehman crisis arrived, the FI started pulling off their money, and you can see that after that, the way the FI pulled off the Indian sector, the Sensex tanked down almost the lowest level, and from it has again risen because of the domestic themes which the Indian economy possesses. So definitely the FIs have a good hand in Indian market. Globally also, if the Europe, looking at the Europe scenario and the US market, where their GDP growth and the growth prospects is almost trimmed down, they are almost running into debts, big debts. So, and there is no chance of recovery. Even if the Fed is infusing money, printing money by way of Q2, Q3, Q1, Q2, and they are also planning for Q3, which I don't think they will be put into. But if also they put in the money, they are not able to recover. This tells us a story that Europe and US has an effect, but in a longer term period, we will dominate them because of the growth story, which is intact, which is about 7%. We are growing, and they are not growing about 2% also.
What is your forecast on Indian stock markets?
Basically, the Indian stock market is at a very cheap valuation right now. Maybe it may be higher terms, ruling at around 17 multiple, but looking at the mid cap, especially, not talking about the large cap will be outperforming, but on the mid caps, which have been beaten down around 50 to 60% and drastically downwards, they will be outperforming in a longer period when the market stabilize globally also. The Indian markets is the best time to get invested. Maybe you can put in 50% of the portfolio or 70% of the portfolio in equity and get in the markets and wait for 1 or 2 years or maybe 5 years. You will get a handsome return of around 100 to 200%, which I don't think is not a possibility if the Indian economy is performing so well, and it will be performing in near future.
What's your advice for investors?
The advice for the investors would be to participate in the equity, Indian growth story, domestic story, which is going to be for at least 5 years from now. And if an investor has to make money, this is the market to get into, and we are into a good phase, and we are out of all the global concern. We are in a much better shape than the global economies, where the Indian investors should participate more and more in the Indian economy by way of SIP or maybe by way of mutual funds, where they invest a small portion of the money, or maybe rich clients may be investing in good stocks where the growth story is immense.
Which stock you are recommending for investment now?
The stock which I am recommending is Titan and ITC, which both are domestic stories, and they are going to be outperforming in the near term with the growth, with the performance they are showing in the result, and going forward they will perform better. Thank you.